Welcome back. It is 8:18. Tax season is right around the corner. Ben Lemoyne, Vice President of Accounting at Mission Federal Credit Union, joins us now to discuss some ways to prepare for the dreaded tax season and give us some tips for budgeting in the new year. Good morning, Ben. Great to have you here.
Thank you for having me.
I mean, nobody likes doing their taxes, let's face it. You're paying the government, which is not fun, but then you got to get all that paperwork together. And the laws keep changing, which is also a challenge.
That's right.
So what are some of your tips for being organized this year in order to be prepared?
So the first quarter of the year is really a great time to evaluate your household finances. First on the priority should be to complete your 2019 tax returns. This will allow you to either get your refund back early or budget for the amount that you'll have to pay in additional taxes.
Okay, and so and there's always an extension, so people should definitely do that if they find that they're
if they do have to pay additional taxes, then yes, definitely take advantage of the extension and push that out to October.
Okay.
In that case, typically, if you got a large refund last year, you want to evaluate your withholding. So you may want to lower that withholding in order to increase your take-home pay. On the flip side, if you have to pay taxes, you may want to increase that withholding to avoid that little payment that you're going to have to make the following year.
Okay, and so really like the middle of the year, you should already be following along and evaluating, really. I mean, it's a little late to talk about it now, but that's something that moving forward people can think about to evaluate where they are with their withholdings and income.
Absolutely, yes. And then you can look at different tax strategies that are in place that you can take. So it's important to note that the Tax Reform Act that was implemented a few years ago has really changed the landscape when it comes to taxes for Americans. Some of the major changes that have occurred are really increasing the standard deduction as well as putting caps on the itemized deductions. So some of the tax strategies that you may have been able to use in the past are not going to be as effective today. However, there are still some strong tax strategies, such as opening a tax-saving advantage plan, such as a 529 plan, which allows you to have some tax benefits on the educational costs of your children or another family member. Some other strategies include funding a retirement account, such as an IRA or a 401k, especially if your employer is going to match some of those contributions. You want to take full advantage of that and not leave any money on the table.
Yeah, that's definitely beneficial. And you say to automate your savings. What do you mean by that?
So automate your savings. So in the example of if you are going to reduce your withholdings, so you're taking more money on your take-home pay as opposed to getting that refund at the end of the year. If you're going to do that, it makes sense to automate that amount and put that do an automated transfer into an investment account or into a savings account. That way it's, you're not thinking about it, you're not tempted to spend it elsewhere.
Yeah, it's not free money. So you're saying you could actually save that money throughout the year and hopefully make some earnings on that.
Exactly. So if your withholding is higher and you're getting that payment, that tax refund at the end of the year, then essentially you're providing the government with an interest-free loan throughout those 12 months of the year. So it's better to take that money up front and invest it or save it as at your discretion.
Yeah. You also say to look for opportunities for higher interest rates.
Yes, so now that rates have come up a little bit, although they have been declining back a little bit, you can look for higher CD rates. CD promotions are a big thing right now, so you can earn a little bit more as opposed to keeping it into a low interest savings account. So be on the lookout for that. As far as investments, look at diversifying your portfolio, look at purchasing some stocks, bonds, and even some real estate.
Yeah, good ideas as well. And the tax saving strategies with the 401ks, you just say make sure. What if your company isn't matching? A lot of them aren't doing that anymore. Other better retirement savings plans?
An IRA is also a good opportunity to save for your retirement. Although your company is not matching your contributions, you're still getting the tax benefits. It's pre-tax dollars going into that account, so you're not getting taxed on that part of your income. So it still makes sense to do that.
Okay. And any just good 2020 tips to give our viewers to move forward to keep the financial household looking sharp?
Yeah, so you can look at your overall debt. It's important to note that not all debt is created equal. For example, credit card debt typically has a higher interest rate as opposed to mortgage debt. Mortgage debt will typically have a lower interest rate, and then really the main difference there is that the interest that you pay on your credit card is not tax deductible at the end of the year, while the interest that you pay on your mortgage is up until a certain amount. So understanding your debt and figuring out what can help you from a tax perspective and what doesn't will help you prioritize on what to pay first and get out of debt sooner.
Attack that higher interest rate first.
That's right.
All right. Ben, thank you so much.
Absolutely.
Appreciate it. Wishing everybody a stress-free tax season.
Thank you very much.
At least as much as possible. The